Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, November 20th, 2020. It is a little after 11 o'clock Eastern Time as I'm starting the video, and what I want to do is follow up on some of the recently highlighted trade ideas. Before we do the trade ideas, I'll just get into the markets. Really nothing new to report there. We're grinding around. Volatility has abated. Back here we had some bigger price swings. There was a lot of volatility. We were trending down there, and then we were trending up with a lot of volatility. We did have that quick, move down there, but other than that, lately it's just been slow grind higher. And then more so sideways recently. Here we go, sideways. We did have, as I pointed out, we had a sell signal on QQQ, but not really confirmed by SPY. That was this 15-minute wedge breakdown. And we've been walking lower, but again, nothing impulsive. We hit that first support / target there, about 289.85, and that's it. I mean, the bigger picture is you have the S&P. It's hovering just below all-time highs. It's not going up, at least in the last week or so, but it's not going down. And so again, it's very, very hard to really make anything out of this. As far as active trading goes, you could have hit that quick short trade after the breakdown, but better fish to fry elsewhere right now, in my opinion, than the broad market. And with that being said, I'll do the updates. Somebody on the homepage asked, Randy, it's important. You really like to see the updates on NQ and QQQ. This is a 60-minute chart of NQ right here. You had a minor downtrend line, again, minor trend line. And we're, just kind of sloppily moving through it, not impulsively. Again, nothing's been impulsive recently. There's a breakdown on the 60-minute chart. It's comparable to that 15-minute chart I just showed you on QQQ. On the futures, we broke down, back tested, walked lower. Again, there was a trade to be made. That was more than easily well over a 1% drop. But here we are. And again, sideways for the last couple weeks here. Pretty much a directionless market. Indicators aren't telling us a lot. This is a trending market. This is volatility, active traders, a lot of day trading ops there, swing trading ops there, even day trading ops there as well. And just lately, blah, really not much. And ES, if you're an S&P 500 trader, 60-minute chart, we had this sideways range pretty much capped by that level. I had a line here in the recent videos, and then I added one here the other day because we had two reaction lows right there, and we took that out. And once we did, it was an impulsive drop below there. So I just want to say that very near term, that's a bearish technical posture on ES because we broke this little sideways trading range here, and now we're down below it, bouncing back above. So again, near-term stuff, the levels to watch. I'm going to zoom in a little tighter here for you. That line, that middle line, is at 35.84 right there. And again, that's near-term resistance. So if we can pop that, maybe we come back up to the top of that recent trading range there. Otherwise, maybe we get rejected. Again, my convictions aren't high. Just kind of grind fest right now in the markets. All right, so let's move on to what is making money, what trade ideas have been or may continue to make some money for us. I have a watch list. I put together all the trade ideas that I've done in the last few videos over the last few weeks here. But I'm going to start out with some of the ones I've been highlighting just to do an update. Gold. I'm going to update gold. Yesterday, this is my GC 120-minute chart, 2-hour bars. So every candlestick, these are candlesticks. They show a little better when I go to a bar chart on the videos right here. So these are 60-minute bars. And here's that same level. It was highlighted way back when, right here and again here, 1852. And so what you have here, there's a reaction. There were some reactions to the left there. Finally we broke out. When we broke out, it was a big run up, and then we had a correction. That correction so far, since gold peaked, that was a multi-year high right here. We've had every pullback contained by this 1852 level. So we've once again had another objective long entry on this pullback here, just like we did here and just like we did here. We still need to take that trend line out right there. We had that little whipsaw, up and above it with a little divergent high right there that was a catalyst for that correction, or the technical catalyst, that is. There, a little divergence. And I think I covered this recently. What I have here are potential divergence lines. You see, I don't have them drawn up there. I have a little more downside, and that would say if gold punches down below here, we'll have divergence. However, we also have divergence now, so I could, and I will do it right now, say that these could be divergence lines because you have the indicators making higher lows and price is making equal lows. So that is divergence right there. You know, price is making the same equal lows, and your indicators making, I'm sorry if I said lower lows, higher lows right there. So that is positive divergence. That may be the catalyst. But again, bigger picture. If you're new to the site, or you've been with the site for a while and you just haven't heard my coverage of gold in the last, wow, gosh, 4 months now. This is the big picture. The euro US dollar pair, it ran into major resistance right here months ago, right there on this. This is a weekly chart. And we've been trading at that resistance. Look at this, it's amazing. Almost every single candle, with a few exceptions, has had a reaction, either the skinny part, the shadow of the candle, or the body on that long-term downtrend line. And that's where I expected when it hit. Gold also hit resistance, long-term resistance, and silver did at the same time, and that was the catalyst for the correction. And so far there was a correction in price. It was about, I think, a 9% or so drop in gold, but more so correction in time. And again, these are weekly candles, so you're going back from when we first hit that trend line. Now it's been 3.7 months. I remain longer term bullish on gold, longer term bearish on the dollar. And what does that mean? Well, if this goes up, the euro is climbing against the dollar. It means the dollar is falling. The euro is the biggest component. It's over 60% weighting in the dollar index. So the yen is a distant second. So really the euro and the yen alone, they make up the dollar index. All the other currencies don't amount to hardly anything. So these are the ones that are going to move the needle, primarily the euro and to a lesser extent the yen. And so if we get this breakout, and that's what I believe will happen based on the posture of the charts, it's not just wild guess. It tells me whether we have another pullback, some more consolidation sooner or later, and it could come I shouldn't say any day, any week now, because it's a weekly chart. I need to see a big solid green candlestick close above that trend line, a convincing breakout. And if it's just a small close above, then I'll wait for the following week. And the same thing with gold. When you look at the long-term chart, roll back here. This is at the same time the euro and dollar, euro hit resistance, dollar hit support. You ran into long-term resistance with a little momentum overshoot in gold. And so this is a weekly chart of gold. Here's our consolidation now for, again, almost 4 months. There's a trend line. And ultimately, I believe we'll break out and go up. But unless we do, as I like to say, resistance is resistance. So, can't rule out that this was a major top in gold and we come down. You can't rule anything out. But that's where we're at now. And again, long-term, bigger picture. Please do not confuse with the near term. I keep updating this gold and silver, these 60-minute charts or 120-minute charts. And so this is just, active traders, or maybe you're a long-term investor, a trend trader, and you believe that a breakout in gold is imminent, and you're looking for objective levels to build a position or add to it before it even breaks out of that level. Well, this is objective right there. 1852. Again, I would allow for a little washout move in case they try to shake out, run the stops on a breakdown below 1852. So yeah, again, if you're a longer term investor, if you're a very active trader and you're gaming these little quick bounces, then you want to keep a tighter stop. So that's gold. Let's move on to silver, and then we'll get to the other trade ideas, individual stocks, and I'll update coffee as well. Silver, I've had support here about 23,672 for a while here, and this uptrend line. We took out the uptrend line, so that's where I mentioned the last week, I believe, or earlier this week, an objective stop if you're in silver, and it took it out, so it took us back down to that 23,672, where it would have been an objective long or an objective time to cover a short, and we bounced back up. So like gold, we're kind of bouncing around. You keep getting these buying ops down to support. We already hit my target. Last time I mentioned it with gold was when they both pulled back to support here, primarily gold. And silver already had a nice run up to that 24.33 target. So my minimum, swing target has already been hit. It's just a matter of, do we continue on up? And if we do, then my next target's up here around 26, maybe a little shy, closer to the $26 level. That was actually support back here, but this reaction high fell a little shy. So we'll call it 26-ish for that potential target there. Okay, and the other commodity I've been on lately is coffee. I was on natural gas, but we clearly took out any and all reasonable stops, those levels. So I'm not updating natural gas again until I see anything. That, like I said, those stops, the levels that were suggested were clearly taken out. So that trade's out of, no longer in play. And I'll watch it when I see the next objective setup. Coffee, big breakout here, bullish falling wedge, positive divergences. Again, I've done a ton of updates here, so you can check the old ones, the old archives. We've been moving up. Nice pullback today. Not nice if you're long, but again, it's the nature of the beast. Coffee is a volatile instrument. Tends to be mostly unidirectional, but even along the way, when you go back in time and you look at all the rips, I'll get to the coffee ETN in a second, but you can get every now and then a sharp pullback. This one started after the bottom here in the divergent low, and there was a sharp pullback. We had a little more downside from there, but then coffee went up. But again, little sharp pullbacks along the way are normal, even if it's a mostly unidirectional trend. You're not going to have all green candles. So right now, no technical damage is done. It's a big down day. It's not fun if you ride out pullbacks like that. But here's a trend line, and it shows. I'm going to show you this trend line on JO, the ETF or ETN that some of you might be in. So basically, the story is since the breakout right here, really since the divergent low in coffee, we rallied almost 20% in just a week. A little more than a week, a little less. I don't know exactly when was that, November 4th. So a couple weeks there. And we overshot a little momentum field overshoot of my 226 target there, 2226 target, and a pullback. And when we look at Joe, the ETN, which I know some people prefer ETNs over futures, you have the similar thing. There was your trend line, 60-minute divergences. This is a 60-minute chart, and a rally, breakout, a rally. And here's the trend line I showed you the other day, and look, we're right back to that now. So there's a trend line that offers an objective entry or re-entry, and also you can have a stop somewhat below there. Again, it depends if you're active trading or looking for the next big wave up, which I am, so I'm going to give it a little more room, but I'm going to say right now 33.92 is a pretty decent support level, and you might consider a stop on maybe a daily close below that level, a solid daily close there, again if you're swing or trend trading this one. Okay, and then just to follow up on some of the individual stock trade ideas, as I said lately, the broad market, major stock indexes are stalling out. I don't see attractive risk reward to the upside because of the divergences, even though the S&P could easily pop that previous high. Again, there's divergences across the board, and I think any new high soon will be a marginal new high, and nor is it a foregone conclusion we're going to make new highs. The FANGs continue to lag. I'm not going to go off topic here and go into all the FANG stocks, but Apple, Microsoft, Amazon, they're all still well off their highs. It's been months now, and again, that could be a red flag on the market. It may just be that there's some temporary rotation out of those big leading market leaders, or they're worn out and tired, and that wouldn't be a good sign for the market if they can't or don't start to participate soon and confirm new highs. Back in the old days, they used to talk a lot about Dow theory, and that's when the transportations stocks, if they were lagging, the Dow and the industrials were lagging, there was something, a red flag there. Well, that's old school stuff. I think now, what you want to see is those market leaders, you want to see them confirm new highs in the stock market, in the S&P 500, and right now we don't have that. So I'm going to go into some of the trade ideas. Here's a watch list I put together with all the stocks covered in recent videos going back the last few weeks. PEIX, let's see, it was first covered, recall, back here. It was covered as a short setup just before it broke down. I covered it first as a setup, meaning a setup is not an actionable trade. You don't have any sell signals, or you didn't at this time, but I said a break of this trend line. Then I followed up the day of. It broke, and it wasn't a big gap down. We gradually cracked an impulsive red candle, so that was a easy sell signal. In other words, sometimes you gap down so far that it's not very objective to chase a short. And PIX, I laid out these 3 targets, and it went on to play out, beautiful short trade, almost a 50% drop, 48.5%. I always talk about this when I cover these stocks in a video, trade ideas. If you don't see T1 equals, sometimes I'll even write that, but these are all, and most of the stocks covered in video format are unofficial trade ideas. And so I always say you want to set if you're shorting, you want to cover just below the actual support level you're targeting, because it's quite often when a lot of eyes see a level like 516, the buyers are going to step in early. Likewise on a long trade, if I were to have covered there, and we came very close. That was a low of 527, so that's about where you should have covered, and that was the final target. The reason I list final targets, that's usually where the trend will end, and then you can reverse a trade. And so far, I mean, had you swung it down, captured most of that 58%, turned around, reversed at that final target, you can see in just 2 days this thing's popped about 25%. And look, there's a perfect opportunity to take quick profits. It's at 650. That was the second target. We hit that today, hit a high of 655, another great example. 649 was resistance, and you also had that 50-day moving average right here, and it hit both of those. So again, just active trading stuff, trade ideas that are out there. I haven't updated this one in a while, but I just wanted to mention, hit the final target, at which point, any shorts should have been closed out, or at the very least, if you were holding out for some type of a collapse in PEIX, 50% drop is a near collapse. But again, when you look at the run up, it didn't retrace, but a mere fraction of that move up. But what I was getting at, you could always just put a stop, lowered your stops to protect profits, at which point you'd probably be stopped out here, or at least if it goes much above 650. If you're somehow, I don't see a reason to hold out for any more. I was just looking for those targets there, but that's where you could put a stop if you're still short this one for whatever reason. If you're long, I don't. PPO's turning up here. You had positive divergence on the RSI, but I would again take the quick money and get out, especially if you already covered the short and were quick enough to gain that bounce. All right, moving on. Let's go on to the next one. I'll just cover those that are moving now. USRM still needs to take out that resistance about 0.8%. Penny stock, high risk, but a high flyer. I've already highlighted how much this one can and often does run. But again, uber high risk because it's a very low price stock. Rig just continues to move up. A lot of the oil and gas, especially the exploration production or the drillers, doing very well. Again, I highlighted that a few weeks back, that energy was to me the most bullish looking sector setting up in the S&P 500, and it went on to break out after the elections, and so a lot of still upside momentum, and it's not even to my first target yet. These are all potential targets for rig. ORGO covered as well in recent videos. I just wanted to point out it broke out, and it's up about 7% today, but I said it needed to take out 479. It did it yesterday and closed above it for the first time. Remember, this was an intraday break, but we failed to close above that level. We closed back below it. Closed, had a couple rejections there, intraday break, but a failure. So that yesterday's that was our breakout candle, and we see a follow through green candle so far today. That remains the first target, 591. Potential second target at about 823. Again, unadjusted targets. Sell a few pennies below those levels if you're targeting either or both. XXII. That was covered here recently, right after the breakout, I believe right here. And it's been a heck of a run since then. This one's run up about 120%. Got a little stretch, given a little bit back today. It was up at one point earlier today. And, 120 was my initial target, blew right on through there. That's the other line I had there at about $2. And that's still a potential second and final target where I'd take the money and run if you get to $2 anytime soon. Again, it's taken a little breather so far today, but been moving higher lately. Okay, UAN, this is one of the ag input stocks I covered recently. I did those in I think the last trade idea update video. Trying to pop this 80-cent level. It's popped it the other day, went back down below, just a hair above it today. So not a convincing breakout, but if we can get a little more traction, a little more upside here, that should put that level in the rear view mirror. One level I could also do is add a little trend line there. But again, 111, first the minimum target, which even if just that target is hit, you're talking about a 38% run. Second target, 135. Again, covered recently, so I'm not going to go over it in detail here. IPI, another ag input. So what you're seeing here is a common theme, at least with these two so far today. Another one breaking out. So again, when I'm looking at a sector, and I highlighted quite a few of these ag input stocks, you guys know I'm longer term bullish, and there has been nice bull run in the commodities recently, ag commodities, and that's I think ultimately, and I believe it is starting to spill over into these ag input companies. But there it is. There's a breakout. Up 4.3% today, and pretty impulsive so far. So if it can hold above here today, that should open the door for that first target there at 14.28, and next target there is all the way up there about 20.87. EXPR, this is an apparel store. I highlighted a few of the apparel stores in the last trade idea video. Continues to move up, getting close to that 127 target. I'm not crazy about these long term. I would take the money and run there, even though I listed a second target at 255. If you get anywhere there, maybe sell at about 123, 124, and get out if you caught any or all of that. PEI, this is a REIT, still yet to break out, and I guess that's it for today. Let's see. Yeah, I'm not going to go over each and every one of them because a lot of them, the others haven't broken out if they were setups. I don't see any other breakouts today, so I just wanted to update those. I did want to do that update on coffee, like I said, and gold and silver. I'll stay on that trade for as long as there's at least a short-term trading up there. Okay, that'll be it for today. This has been Randy Finney with Right Side of the Chart. Have a great weekend.